Get off the Wi-Fi. Here we go, ladies and gentlemen. We got just a few minutes, 3 minutes. 3 minutes. I hope everybody's doing great tonight. Vote on the poll. We're going to be starting here in just a few. I am pumped. You better be R2. You better be R2. I hope you are as well. I love that. We're going to have a good time, guys. Uno más el momento. Just a little bit longer, guys. Gonna get it. What up, Beef Stewie? Starting in 30 seconds, guys. Okay, let me take a little sip of water and we're gonna hit you with the intro, baby. What is going on, ladies and gentlemen? My name is Dave, and I am pumped to be here. Now, what am I swimming in? This beautiful sea of red, the Red Sea, if you will? Well, we had a huge pullback, but always remember, these pullbacks start setting up amazing spots in the market where we can start to see our trend and base breakout strategy. Of course, I am risk off currently because the S&P 500 is below a 21-day moving average, but we do need to keep in mind that this is all cyclical. We are expecting a lot of this to happen. We are expecting a pullback after the break of the 21-day moving average. So it's a good day to be risk off on Friday. That is for damn sure. Now, we have plenty to look at. We're going to find the relative strength in the overall market. Even in this sea of red, we want to know what has been holding up the best, if there are stocks out there worth keeping an eye on. So that way, when we get above the 21-day moving average, we can find those stocks that are being held down by the overall S&P 500, and we can jump in and make a few dollars. Of course, we do have a swing trading strategy right here for you. It's a beautiful thing. Just go right here, click more, scroll down, and click on this beautiful link tree. We have plenty on here of the YouTube, Discord, TradingView, Instagram, TikTok, Facebook, and X. On TradingView, it is what I will be using right here to show you what we have in store. So we're going to go over the overall market. We're going to talk about the economic calendar coming up for the week, and of course, what is going on with that CME Fed tool. What are we expecting right now for a rate cut? So stay tuned for all of it. But first and foremost, of course, we don't want to leave any man behind. We got Erica K, or woman, I should say. Erica K is in the building. Hello, Hello, hello. Good to see you, Erica. Yosef is here. Jimmy Bright is on a laggy stream right now. Well, you need to tighten up, brother. You need to tighten up. You're saying it's slow. You need to tighten up. Beef Stewie, and of course, Bob Dan, the greatest moderator alive, has blessed us with his beautiful presence. We already have 8 votes on the poll. The question is risk on, risk off, or that is the question. Or trying to work on new things. Tell me what I need to know, sir. We have 12% saying, tell me what I need to know, sir. 12% saying, trying to work on new things. 62% of you say that you're risk off, as well as myself, and 12 say risk on. So keep on voting on that poll as you pour in here, and we are going to start off with a little look at the S&P 500. Now, I want to give you guys a quick play-by-play so that way you can understand when I see these things, right? We could go all the way back. Like this is a more fond memory than some of my childhood memories, guys. Like seeing these, seeing everything that happened all the way through all of this whole bear market, everything. It's just, there's so many memories tied to this. But what we're going to do is we're going to keep you on the most recent trend here, okay? If you guys remember when we broke the 21-day moving average here, we were risk off the last time. And it held the 50, which we were rooting for, and then it broke back up. Let's remember this $50 or this 50-day moving average hold that we've seen, which is also the 550 area, okay? We'll call it the 535 area. All right, it's very important, so remember this area. It held for a little bit, then the Japanese carry trade broke us right on through. The VIX Volatility Index went crazy, and then we had a big bounce, a rubber band move back up to the top as we traded sideways for quite some time. Not only did we get a follow-through day, okay, but we also were on a power trend because the 10 was above the 50-day moving average for over 10 days. And that's really important to know when you are a momentum trader, that not only did we have some volume come in, but we had sustained buying power and we were in a power trend, meaning we were above that 10-day moving average, or I'm sorry, above the 21-day moving average, and the 10 was above the 50 for 10 consecutive days. With these in line, we were expecting to see greater good. But why did we not get in? Why did we not jump? There was no setups. And on top of that, we didn't get a breakout of the all-time highs at 565.16. What happened, actually, was a big pullback and a break through the 21-day moving average. This is when we said risk off. By the end of this day, just before the end of the day, actually, when we broke the 21-day moving average, I closed my charts and I let the record breathe. I let the record breathe. I let the stock breathe. I let the S&P 500 tell me what I needed to do. Well, it said to stay out. It said to get out. It said to stay out. And then with us closing below a 21-day moving average, the only thing I personally am looking for is something to short. Okay, and I'll tell you what I did. It's not a part of the strategy that I teach, but when I'm expecting a further pullback, I'm waiting for a pop, and then I'm going to ride the drop. And we'll go over that in just a minute. But I just want to show you guys the S&P 500. After it broke its 21-day moving average, we were risk off. Risk on here above the 21, risk off here below the 21-day moving average. Now in the long-term portfolio with my long-term investing account, yes, we were in somewhere around here. I didn't get in right as we broke through the 21. Yes, I missed this whole carry trade, the Japanese carry trade. So it worked out, nice, clean, got back in, got back out. So I may have made, chump change on this, but it's keeping me safe. I'm not taking this big chop. I'm not handling this big chop. I'm getting in when we're above the 21. I'm getting out when we're below. And if you look at the history of the S&P 500, even as of recent, within the past year, you'll see anything above a 21-day moving average has made me money and anything below it has not. So that is my specific rules for the long term and for my base and trend breakout. What is going on, Predator? I am pumped that you are here. I know you got some tickers for me. You scoured that. And the scanner that we post in our Discord, which guys, you're more than welcome to join. But we posted, you had 41 tickers out there. 41, that seems a little excessive. I always recommend kind of reducing your criteria to kind of consolidating a little bit more, or only taking the best of the best setups, because right now we only want to see the best of the best. We want to know what's holding up while this overall market's pulling back. So let's run through the indices. We'll run through the sectors. I'll give you the stocks that I found were working out well, economic calendar, and we'll talk about the Fed rate cuts. I hope you guys are ready. That was your S&P 500 stock analysis or ETF analysis, because this is the main one, guys. This is the one that I look at, that I focus on. IBD, they like to look at the NASDAQ. Me personally, I like the S&P 500. I want to know where the general market's going, and I love using that 21-day moving average. This is your mid-cap stocks. You guys can see right here, we're below a 50-day moving average. This is a huge rip back down. We're still in a very, very large channel. The small cap stocks, you can see, also did the same thing. You knew that my portfolio in my long-term account, we had around 20% of my portfolio in this on the way back up, and we held off, but we exited again right when it came out of that 21-day moving average. So I am still just break even on that trade as well in the long-term account. QQQs is leading the charge to the sell side, much lower than a 50-day moving average. Also, the 50-day moving average is curling down. So that's very, very bad look. It's very alarming for the overall market. And of course, we have Bitcoin. Now, Bitcoin is holding what you could consider a head and shoulders in this area. I'll just draw this out for you. Here is a shoulder, here is the head, and here is the other shoulder. So this should be, if you're looking for a proper head and shoulder, you could consider this a proper head and shoulder. It's not as clean, but like I've been saying, if it breaks this 50,000 area, Bitcoin will head much lower. So we do need to be careful with Bitcoin if you're in that strategic play. Of course, I do think Bitcoin is to go higher in the long term. I am bullish on Bitcoin in the long term, but in the short term, I have no idea what's going to happen. We're at an area of what you could consider support, a range support, because you have this range up here. You could also look at this being a range down here. We could just slide this down, saying that this would be its range down here. And you can see its next area is to pop back up before coming back down. So we'll see where this lands us, but I think this 50,000 is not just psychological, but it's a nice technical pattern that if we can hold, we can continue on. All right. Minerals is pulling back below a 50-day moving average now. XLK, which is the QQQ, below a 200-day moving average. Guys, this is pretty scary. This is not something, when you're below a 50-day moving average, that is kind of one of those things. It's like, we're hands off that sector. But when we are below a 200-day moving average, my grandma always says nothing good happens below a 200-day moving average. So do keep that in mind. XLE, do I need to say more? Not just below its 50, but it's also below its 200-day moving average. XOP, which is your gas and exploration, also below all moving averages. Now, communication held up well for quite some time, and I have a trend drawn out for you, but we still have to understand, as momentum traders, you can see here, the communications has finally broke that 50-day moving average and is starting to head down pretty fast. XLU held out very, very well, and even on the biggest pullback, you can see here, XLU decided to hold on to that 10-day moving average. And that's exactly what we want to see in the strength. What is strong here? Now, we might not want to see it in the XLU because that is a defensive stock. People decide they want to channel in to utilities and into consumer staples because you will still need those. No matter how hard or how bad times get, you're still going to want electricity, water, gas. You're still going to want food. You're still going to want, all those simple amenities. As to where discretionary should be, you're not going to go out and buy a Tesla if we're in a recession, right? Now, you might. Some businesses will feed properly off of a recession, but usually your utilities, I have seen energy as well head up higher, but in this state of the market, we'll continue to see. So XLU right here, trying to hold that 10-day moving average. It has been on a beautiful run ever since this bottom down here at 67.59. Now, here's the consumer staples. Oh, I had a long day, guys. I got punched and kicked in the head way too many times. Sorry about the yawn there. We have a breakaway. We drew this out for you. You guys remember me talking about consumer staples, saying how it was strong down here. It created this beautiful trend, and then it broke out. And when it broke out, look at this, bouncing off that 50-day moving average. That's why I use the 50-day moving average on these ETFs, because anything below a 50-day moving average doesn't really work out. right? But you can see here, the 200 started to curl and the 50 held its run, right? And then it had broken down. I believe this was the carry trade. And then it soaked right back up, held that 50. And now look at this. As it gets tighter and tighter and tighter, this thing really started to take off. Now holding at 10-day moving average, XLP, also known as consumer staples, is our leader in this market. So if you are looking for any stocks, any stocks whatsoever, the hottest sector first and foremost is going to be a consumer staple, okay? Consumer staples is rip, rip, tater chip into the north side. It's holding that 10-day moving average. Can it continue to hold? As long as we have fear in the market and consumer staples continues to hold, it'll continue to go higher. We will see very soon what happens after the overall politic BS is finished and through, but I feel like we are going to have quite a hard time getting out of this fear with all the uncertainty and with the wars that are going on currently, and of course with the job labor market being a little shaky. Now, it always pays to be positive, so even when I say all this, I am still ready at any point in time for this S&P 500 to shape up and have a rebound effect. I always tell you guys, if we have a big pull down and it's very fast like this one, you need to expect a bounce, and we might get that bounce. But just like this bounce that we got, it could be headed for more selling. So be careful out there. I'm waiting for above a 21-day moving average, as you guys know. So consumer staples, yes, consumer staples is looking good. XLU, utilities, looking good. XLV, finally starting to break down here. XLV has been on a nice run after it broke out of this high. After that, this is what I would consider a nice blow off top. What do I mean by that? Well, we get all this volume to the north side, and then you see how big this wick is? It sells all the way back down, almost to where it started that morning, okay? So this is a blow off top on that XLV. Could this be through for the overall health sector? It very well could be. This could mark the top, but we will have to wait and see. Breaking a 10 and 21-day moving average, it's trying to hold that 21 now, so it could considerably still continue to the north side, but I think we need some more time. Right now, this is not the hottest sector. It was, but it is not. The industrial is heading back down to its 50-day moving average. Still stronger than a lot of your tech stocks. Still stronger, still holding that 50-day moving average, but still has broken down. XLY, consumer discretionary, you can see has broke all moving averages. XBI, this is the biotech. It held up so well for so long below all the moving averages. XRT, this is retail, below a 200-day moving average, folks. That is a bad sign for retail. XLF, now it was doing very well. It was showing its stars. It was showing its stripes. But now it is trying to hold a 21-day moving average. So it's still better than a lot of the other ETFs, but it's not like your consumer staples or your utilities currently. So financials is having a hard time. And then, of course, we have real estate. Real estate and consumers staples lead this market currently. So keep that in mind when you're looking at stocks. Maybe do a search that is specifically for utilities and real estate. What I like to do is find the fastest movers first, your average daily range, the percentage movers. If they're not moving fast, I don't really care to get into them, because why scour the stocks when you can get into something 1.1% right here? This is slow enough, and play all the stocks instead of just playing one of the stocks, right? If it only moves 2%, maybe 3%, sure, you could do that. Or you could get an ETF that's leveraged like this and just play the whole market, okay? I was doing that a little bit with, I believe that was XLU right here on this breakout. Yeah, right here. I played this, just this little move, because this was a base breakout right here. So we played this little bit of a move, and it's just because, hey, I wanted to play a base breakout. We didn't have any base or trend breakouts. This is a slower mover, so I just got into it at a very slow time. So that's what we have here. That's what we have going on is utilities, very, very strong. We have consumer staples, very, very strong. And of course, your real estate sector, very, very strong. In the runners up is healthcare, industrial, financials, and biotech. So they're kind of like the runners up. But the RSP, now this is going to be your equally weighted S&P 500. You can see it's still above a 50-day moving average. So there's still some hope here that it comes down and it retests this 170 breakout area. That's some good news right there, folks. That's some very good news. Okay? Now, one thing that I do want to go over just really quick, because the Mag 7 was doing so well, we're just going to look and show you that the majority of stocks, the percentage of stocks are below their 50-day moving average right now. Okay, I don't think it's too much of a surprise, but I do like you guys to have an understanding. This MMFI was shown to me by Covey a long time ago. I like looking at this because it just kind of shows you where the overall market sits. Above a 50 is stocks that are the percentage of stocks, the majority are above their 50. Below this 50, the majority of stocks are below their 50. So currently, the majority of the stocks are below their 50-day moving average. So let's keep that in mind. The VIX Volatility Index started to kind of heat up in the past couple days. We don't mind it being down here in the 15s, but when it starts ramping up over 20, we get a little nervous here. Just as we shown back here, we drew a line in here and a trend line in here. And we watched the VIX start to heat up, and then bada bing, bada boom, we had a big issue here, right here. This is the Japanese carry trade, which is also right before we thought we were going to have the great rotation. So we didn't get that. Of course, it sold right back off once everybody got their ducks aligned, and we tried to start trading sideways. Now, what is to happen here? That is the question, because things are starting to get heat up. And I am pretty curious what you guys are thinking on this, right? So VIX is starting to heat up. We do have some issues out there in the Middle East with Russia, with, with the political agendas, trying to hash it out to figure out who's going to be our next president, the excitement of that. And of course, the lull of summer, the cyclical run of summer, and September being the slower month, the more boring month, the more, we did a little video on the September effect if you guys want to watch that. So let's go ahead and look at your stocks in the Magnificent Seven. And then what's going on? What's up, Robert Tainch? Good to see you, brother. NVIDIA. So NVIDIA was our leader. This was our leader of 2024 and 2023. This thing is now broken all of its moving averages, and it's heading down close to that 200-day moving average. The 200-day moving average is still heading up. We still have an RS rating of 94, but we have to keep in mind, I think every time I yawn, I'm going to do something like this, so that way it covers it up. Oh, man. But anyway, guys, back to what I was saying. With NVIDIA pulling back like this, we do not want to see this. This is just bad news bears, guys. NVIDIA, poor soul. We'll see what happens with it. The numbers are great. Everything's doing amazing. They're still ramping up and ready to go. But remember, the market always likes to look ahead. So whether it comes to evaluations and you think it's overvalued, which I think everybody should know by now, it is overvalued. All of this buyout is it's baking in the progression of AI and for it to basically explode. So it's digesting a lot of this information. A lot of this information is getting digested here. So just keep that in mind, guys. We need to keep an eye on NVIDIA. And always remember, after a pullback, a lot of times we won't have the same leaders. So that is NVIDIA there. Let's take a look at Google, breaking down now below the 200-day moving average. Wow, that is something else. Let's take a look at Meta. Meta's still holding up, but breaking its 50-day moving average. Apple looks like it is also breaking its 50-day moving average. Tesla, good old Uncle Tesla, started to show some proof of concept here and then broke right back down to its area of support again below all moving averages. AMZN below a 200-day moving average, and Microsoft also below a 200-day moving average. That is a scary sign. That is a very scary sign. Yosef says the Japanese index is red. Carry trade over. We could take a look at that. Actually, I can just bring it up here. I like doing this here. Go here. Oh, it didn't do it this time. Of course it didn't. Usually I can do Markets. This is the greatest platform out there. The Nikkei. Where are you? There it is. I got you, brother. We'll see it on the super charts. So Yosef says the Japanese index is red, carry trade. Yeah, I mean, this could definitely be, what's happening with the overall carry trade. Like when we look at what happened over here, and we get a huge rebound like this, sure, this could be the remnants of what's happening here. Absolutely. It very well could be. I mean, we don't just go straight down and we don't just go straight up, but after a hellish move like this, we're going to get some rebound, and we did. And now it's starting to ease off, and look where it's easing off, right when it started to fail. So now that it's easing off as it slows down here, and it slows down, now look, it's starting to fail back down here. It's not too surprising, honestly, but the question is, will it make a new higher low? That's the question. So if we look this on more, let's go ahead and tighten this up here. If we look at this, on a longer term effect, we'll just look at it on the daily here. So if we look at this on a long-term effect, obviously anybody could just go, pull and do one of these, right? So this broke through this area, right? That's dangerous, right? And then it held, and we had all this progression, and we had a huge sell-off. The question is, are we going to be able to make a new higher low? So even if it dips down to that psychological $34,000 area, will it hold that area? Because that's its next area of support, Now, I'm not saying that the Nikkei index is going to show what America is going to be fruitful or not, but it's definitely one to keep an eye on since we obviously had so much turmoil in the Japanese market. Now, I think Wall Street has had time to hedge their bets in different ways. The question is it really over? Has everybody gotten out? Maybe people panic out again, but maybe most of them are already out. That's hard to tell, but it's a really good question, and I really appreciate you bringing it up, Joseph. Yeah, Dan brought up Apple again. When we look at Apple here, Apple on the daily, it was looking good for a very, very long time, and it's really trying to hold that 50-day moving average, but it's just been trading sideways for too long now, and it's below that 50. So this could be a big issue for Apple. But we'll see. Of course, it could shape up. But even if it does, I still want the SPY to be above a 21-day moving average for us to really look at something to take in a trade. Okay? All right, next up, we're going to go into the economic calendar, guys, before I go over the few that I have on my watch list. But first, take a look at my screen. Do me a huge favor here. I need you to hit this like, and I need you to hit that subscribe button. Of course, you don't have to, but if I'm bringing you any type of education or entertainment to your sweet, sweet ears, do me a solid. Smash that like, hit that subscribe button, because that is the key to survival in this YouTube village or metaverse or whatever the hell you want to call it. That's the key to survival. Like and subscribe, baby, and I will forever be in your debt. Okay, back to the show, guys. So let's go over the economic calendar. And I always want to make sure everybody understands how to get here. I just use investing.com. I think it's the most simple, investing.com. No, they don't sponsor me, but they should. And if we do this, you go to economic calendar, you'll have filters. If you click on filters right here, you'll get all of these countries up. They'll all be clicked. You just clear all, okay? Just hit clear, and then you scroll down, and you'll click on United States, and then you will click on right here, importance, 3-star. It'll give you all the most volatile ones, okay? You click apply, and then the only thing you guys are going to get when you go to the economic calendar is that week's, click on the week, you will get all the hottest CPI, the 10-year note auction, your initial jobless claims, and your PPI. And if we look on here, you'll see right away, we have ads. Let me get rid of those for you. But you'll see right here on Wednesday. So we don't have anything that we need to worry about Monday or Tuesday. But Wednesday, that core CPI comes out. Consumer Price Index. That's what we are paying essentially month over month and year over year. What we are comparing the previous month. Okay, so this is going to come out for August. So it's taking August because we don't get that data till the end of the month, and they're comparing it to the previous month and the previous year. Okay, so do keep that in mind. And core CPI is going to exclude like food and energy. Okay, and then CPI is going to have the food and energy that is in there. Okay, the forecast is expecting it to go down a little bit on the year over year, which I really do hope it does. That will show beneficial and fruitful for the overall market, but we will see. So Wednesday, we have core CPI, CPI year over year, month over month. We had crude inventories coming out and the 10-year note auction. And of course, Thursday is going to be a big one with initial jobless claims and the PPI index coming out at 8:30. All right, so do keep that in mind, guys, when we are trading. Wednesday and Thursday at 8:30 are the times to really be focused here to see how the overall market ingests this data. I think it's going to be very, very important, especially the data is going to change this. This here is our Fed rate cuts. What is Fed rate cut? Well, right now, if you go to the bank, you're going to have a big issue with trying to get a loan. When you get a loan, they have to bump up whatever they're being able to borrow from the Fed. So if the Fed says they are at 5.5%, they're going to take your credit and then they're going to say, okay, 7% sounds good because they got to make a cut too, right? So with the Fed saying raising those Fed interest rates up, it raises everybody's, it makes everyone harder to borrow. You want to have easy borrowing money if you want the stock market to go up. Right now it's hard. And right now, on the 18th, we are expecting a 63% chance to cut a quarter of a basis point. We have a 37% chance that we're going to cut a 50 basis point. Now, I think this has already been baked in. This is just me, my personal thoughts, my ideas. They're not yours. But I do think if we only get a quarter of a rate cut, that I think it's already baked into the overall market. I believe if we get a higher rate cut, like a 50 basis point cut, I think we have a chance to go higher, okay? That is just my thoughts. Those are just my opinions, but we will see very soon. But the 18th, we will be getting a rate cut. That is exactly what it seems. Now, there's been crazier things that happen, but usually the Fed tries to go with what is expected because they don't want to surprise the market. And if they do, it might show we have a bigger issue, but we'll see. We'll see very, very soon. And then, of course, we will bring up my stock screener. So my stock screener here, you guys can access to it absolutely free. Of course, if you don't have the actual screener that you see on my screen here, what we do is in our Discord, we go ahead and we post this just for you. If you scroll down here, you'll see right here, we have the weekly stock screener. You can just download this and then plug it into this beautiful, beautiful app, TradingView. And if you need TradingView, of course, folks, we have everything. We'll get everything to you for free. You click on my link tree at the bottom of this and you click on TradingView. You download this, it's absolutely free. But if you decide that you love TradingView so much, you want to upgrade to the Essential plan for more things to tinker and work with, then you do that. It helps me out tremendously. And of course, hit that like and subscribe and to join the Discord so you have access to all of that for absolutely free. There's only 2 requirements. There is, of course, your heart of gold and an open mind. If you have those 2 things, I think that you possibly can succeed in stock trading. So go ahead and join the Discord for absolutely free and download TradingView. And if you are lost at all, of course, you can click the YouTube and learn how to set up your TradingView platform so it looks just like ours. So that way you can learn base breakouts and trend breakouts and EP growth, 500% strategy. Don't miss out, guys. Also, we have risk management and plenty other videos that you can watch. Do it. Do it now. It'll feel amazing. All right, next up we have, what do we have? David, wipe your upper lip off. There is something on it. Dan Bob, you know you love it. It's the mustache. I must ask you a question, but I'll shave it for later. Let's see. Yeah, I think 50 would freak people out too, Dan Bob, for sure. I definitely agree. I don't know. What are your guys' thoughts about the Fed rate cut? You know, Dan Bob says he thinks everybody would freak out a little bit over it. I think so too. I mean, there's a chance that we might get it. I think we're going to see a ton of volatility. How far that's going to move the needle on the S&P 500 and what direction? It's kind of hard. It's kind of hard to figure that out. Okay, so I have the screener up here. I went through. I forget how many was on here, like maybe 200 stocks. I'll show you what I have on here, And then I'm going to go through last week's list as well. And I'm just going to kind of give you my thoughts, my opinions, okay? So first and foremost, I have TRUP, okay, Trupanion. I don't know anything about this except for that is in medical insurance. And I just like the way it's getting tight on this 21-day moving average. I don't think that this is ready yet. I also know that the medical sector is kind of lagging right now. It's still holding up. It's still doing well. But as long as the overall market's staying stagnant, I obviously won't be playing these. But I seen that with the overall breakdown in the market, this thing still held its 21-day moving average pretty well. It has an average daily range of 6%, okay? And of course, we could swing over here, TRUP, I'm guessing 85 to 90 on it's 96. RS rating is 96, so pretty close there. Good enough for us to trade it, but again, Dan Bob says the stash equals brown chicka brown cow. Oh, man. And if you guys haven't already, go check out a Possum Uppercut. Possum Uppercut. That's my buddy's band. I watched him play the other week. It's pretty dope. Here is MODD. So MODD has that huge push up on volume, but we just have to wait to see what it does, right? This is the daily, guys. We need to wait to see what it does. Had this huge push up on volume. It pulled back. It's trying to hold the majority of those gains. Now, I'd like to see it form a trend line here. So let me blow this back up so you guys have a better understanding of what I'm trying to do here. We need to see something like this, right? And then maybe even a base here, right? So it can play within this area. And if it gets tight and lets the 10-day moving average catch up to it, because it's been following the 10 for a while, but the 10-day moving average catches up to it like this, and this thing gets really tight here, I think within the next couple of weeks, MOD, this week, maybe next week, MOD might set up for us. Again, this is in a medical, okay? Predator says, I think 50 is necessary, but I think it will send the wrong message. Yeah, I agree with you. And Powell said the worst fear he had wasn't so much a cyber attack, although that's big up there with him, is the fact that getting the balance between the job labor market and inflation right now is his biggest fear. He wants to make sure that he's able to have a soft landing still. He doesn't want to crash the market. He doesn't want to, ruin the middle or low economy. He wants to try and do this the best that he can. COMP, you can see here, we get a big push up on volume right here. It pulls back and now it's holding a 10-day moving average. I can see a clear trend right here, or you can even play this as a base right here, but it's holding that 10. And if it can continue to hold, especially if the market's selling off the way it did, it's a good sign for COMP. So I have it on my watch list. Of course, I'm only going to keep it on my watch list. These are not a playlist because we're below a 21-day moving average. Now, you might ask why I have this one here, because it looks like a failed breakout, right? Huge push up on volume. It pops way up here, and then it kind of gets choppy. Looks like it might hold its 21 and it breaks on through. But one thing that I really like to always keep my eye on things is after a breakout, a pullback for a retest. This is BLND, Blend Labs, okay? And you can see we had this long area of consolidation, and then we finally broke up and out through after earnings. Now this is coming back down and it's retesting this area of 333. I love to see retests, and even on one of the bloodiest sell-off days that we have had seen in a long time, BLND actually gained some momentum off of its base, okay? So I'd like to see this form something here, even create a new higher low before trying to enter into something like this. This is just kind of a different strategy that I'm telling you guys about, just because I see so many pullback and retests. Scouring the market, when you look at thousands and thousands and thousands of chart, you start to see things kind of come together. So I just have this on my watch list to, again, keep an eye on it and see when it comes together. Because, watching a stock is free, guys. You don't have to make any money just watching a stock, and never beat yourself up if, it does take off. You don't have to watch the stock and say, hey, look, this thing, it worked. Why didn't I take it? Why didn't I take the stock? No, we're we're just sitting on the sidelines. We're going to take our time, relax, and watch BLND bounce off this area, and we'll see if it wants to continue to hold. And if it does, maybe we can continue to take pictures and form a strategy around it. But right now, that is a retest bounce. We'll see if it's going to work out. And now I have quite a few of these. Everything beyond this is going to be last week's that we can look at. I've already deleted some of these, but some of these are going to be worth kind of keeping an eye on. So I have AXGN, Axogen. Now we've been keeping a very close eye on this. It's forming a base at these tops right here, guys. And if it can hold that 10-day moving average, that's going to be a great sign for the stock after we have a huge push up on earnings. I forget what the news was, but this thing held out really, really well, formed another nice trend break right here on more volume, continued to head higher, and held that 10-day very, very well. So we're going to see if AXGN wants to have a continuation. And of course, we have ANNX. Now, this isn't the cutest looking stock because it just rips through all these moving averages, right? The 200-day moving average is still curling to the north side, but it's starting to form this trend here, and I couldn't take my eyes off of it. So I just wanted to keep a closer eye on ANNX because after this range and this trend starts to actually break, I think that could be a good sign. So to consolidate some more of this information, we'll throw this on the monthly and look at that, folks. This is a faster mover. Actually, let me bring it back up on the daily. But look at the monthly. Like the monthly almost looks like a 5-star setup. Does it not? Does that not on the monthly? We get a big push up on volume, a pullback on lighter volume, right? It trades sideways. It pops back up on more volume and sells back off on lower volume. And now look, it's getting tight. This is the monthly chart, folks. I like the look of that, okay? Now on the daily, no, not so much, okay? This does move 6% though, so this is a faster mover. If it does break out from this area, I would still want to give it time. I just want to keep my eye on it. This is the psychological $6 area. I'm looking for more of something like a 632 break. You know, if it breaks at 632 and it doesn't on volume, we might be off to the races on this. Now, I'm not saying that I'm going to take it just because we're below a 21-day moving average. Doesn't mean I'm going to break my rules. Excuse me. Excuse me, guys. Sorry about that. I'm not going to break my rules for a stock, but I do want to observe it. I want to be here for it. We also have Affirm. Now, Affirm had this long downtrend, this break above. It follows like a UPST. If you guys remember UPST did the same thing. Earnings came, it ripped, tater chip to the north side, then broke right back down below a 30-day moving average now. Well, that's not what we're talking about, but the same thing goes for Affirm. Earnings came out, it ripped, tater chip, and now it's breaking back down, but can it hold its 10-day moving average? Does this still have a move in it? To me, this is a buy here, pay here. I don't like the strategy on how they make money, but they're making money. Clearly, they're doing better at least than last month. PSIX. PSIX is trying to hold that 10-day moving average. I don't really care for the look of this, but it is working out. So I just wanted to keep my eye on it. It's definitely not a 5-star. Now, remember, guys, these are last week's what I wanted to keep an eye on. And we had a nice breakout on ASTS on here. I alerted everybody in the chat. I said, look, there is 3 stocks. There's CAVA, SAVA, and ASTS. I know that's kind of funny how all those kind of worked out, but they all had similar breakouts like ASTS. And I just thought, man, it was so hard for me to not get into this, but I kept telling myself I need to stick to my rules. And so honestly, I'm really patting myself on the back when I say this. I wanted in ASTS. I wanted it when it broke its trend. I wanted it when it broke this high, this 3163. I was even measuring like somewhere in this area. I was measuring the average daily range of this thing here, which is 12%, and this thing moves 17.5%. I was like, I could still take this, like legally. I can still add this. I can still play this. And I didn't. I said, I'm sticking to my rules. And look, guys, this is it. You know, if it continued to work out, there would be more stocks to follow, right? But it did not. And neither did anything else. Neither did Kava, neither did, and we'll get to those. So here's Sava. Okay, Sava's actually holding out better, but it still was not worth taking this right here, right? This right here, right? This. I mean, it's just trading sideways. Plus, Sava's Ooh, pretty scary stock to try and hold on to. And here's Kava. Kava's still looking the best. You know, a big push up, a pullback, riding the 10-day moving average. I'd like to see this continue to break out, you know. But, you know, with the overall market, it's just not happening. PRCT, look at, this is what I had set up for last week. It was looking good, guys. If you guys don't remember, I made a couple $1,000 playing this on an episodic pivot. We made, I mean, it was a beautiful, beautiful thing. Beautiful, beautiful thing right there. Absolutely loved it. Can you type those? What are we talking about? What do you want me to type, brother? The tickers that we're looking at? It's, we looked at Kava, Sava, and PRCT. We were looking at this. This thing was absolutely beautiful. I really liked the look of this. It was getting really, really tight. I would say, you know, what I wanted to see personally was like 2 or 3 more days, and then for it to break out of this area. But within those 2 or 3 more days, it broke down. And as I've been telling people a lot, it's kind of a joke, but if it's not a base breakout, then it's a base breakdown, right? Or a trend breakout or a trend breakdown. And I really had a hard time. And that's why it's hard to like keep your biases like set aside, where I wanted to take the breakout, but as it broke down, I was like, no, I can't take the breakdown on this because I'm so bullish on it, right? But this would have paid. This would have paid very well, very quick. I could have made a nice quick chunk of change. So even looking at a trend breakout strategy, you could still play a trend breakdown strategy if you're comfortable with shorting. Now, I'm not telling you to buy or sell anything. All I'm saying is find your strategy. Find what works with you in the right market. And that'll lead me into, and we'll come back to this, guys, but my AMD trade. So AMD as the overall market, and we'll just go back to the SPY really quick to show you. Right here, we were risk off, guys. I have it marked out below the 21-day moving average. We went to bed that night, hoping to be above a 21-day moving average the next day. But after a big sell-off like this, on volume, after a power trend and a follow-through day, we had all this like initiative to head higher, and we don't. We have an expectation breaker, as they call these. It broke expectations. So on that next pop, I was actually looking for something to short. Now, because this is not in my strategy, it's not in my wheelhouse of like the best stocks, my best form of trading, I had to take this on much smaller share size. So I only took about 0.25% of what I normally risk, okay? I was only risking $50 on this trade, but I made over 7% on the trade, which was close to 20 R. So if I was risking 1 R, I gained 20 R. So that is a 1 to 20 risk reward ratio, and I'll show you exactly what happened here. We get this big breakdown in AMD, and why did I choose AMD? Because it's a lagger. If NVIDIA is going to head down, AMD is going to head down much, much quicker. So this thing moves 3.9%, which I was fine with because I'm shorting, and I'm also looking for a quicker move than that because AMD is the lagger, right? So we have this little pop up that we had, and I seen this top that was starting to prevail. And if we go into the 5-minute, ooh, not on this. Let me go ahead and show you up here. If I show you on the 5-minute here, you can see right here, we get this pop up. So huge sell-off here, huge sell-off. You can see we bounced off this area of support at 138. And as we bounce back up on the hourly, I'll zoom in on the 5-minute in just a second. We bounce up on the hourly. You can see we start to teeter here. Now let me zoom in on the 5-minute and I'll show you exactly why I took it. Okay. All right, so here we go. So we get this big sell-off, right? And we get this pop up here. And then I see this starting to curl over. I see it start to fail here. And then I start to see some wicks off the top of here. And then we start to break down. So when we start to break down on this next pop right here, I entered the trade risking $50 using this high of day, expecting this to continue to fail because after such a big sell-off, I'm expecting a pop. I'm expecting a pop and I'm expecting a good one in the morning. Well, if you look, the pop popped, but it was on lower volume and it popped up on much lower volume. And then we sold off. So using this high of the day was able to risk $50 to make $1,000, guys. And all I did was go to work. That's seriously all I did. I went to work And I said at the end of Friday, I'm going to take half. I told myself that that's what I was going to do. But then we had this beautiful day. So after a big sell-off this day, a nice pop-up, a bigger sell-off this day, a nice pop-up, we had this huge sell-off once again. Okay, I'm thinking we're going to get a nice bounce back to come back up to retest 138. I'd rather lock in profits and wait for it to bounce back up here before I short again. All right, so that's just an idea. It's my thoughts, not yours. I just want to let you guys know, that's kind of what I'm doing for shorting right now. I'm looking for areas of resistance. Okay, this area of resistance right here, I just decided to take it on weakness, risking very, very small, very, very like 0.25% of my account right now, guys. I'm not risking 1%. I'm risking very, very small to try and earn bigger money to capitalize on a faster move to the sell side. Okay, so that's all I'm kind of looking for shorts. Now we can go back into looking at these like PLTR. Take a look what PLTR did. In the after hours, this thing ramped right back up to all-time highs. Now, to me, when I look at something like this, of course, we need to know the catalyst. We need to understand the news on this, right? Because if it's ramping up like this in all-time highs in the after hours, that tells me we got something going on. We got London on the track, right, guys? All right, so let's go ahead and bring up some of this news. And let's see. 9-8. That's not on here. Why is it not on here? We're going to bring up our best trading platform and bring up PLTR. It's like, why? What happened, PLTR? Let's see. They got some news right at the end of the day. PLTR jumps on S&P 500 edition. Oh, so PLTR has now been added into S&P 500. Investors love it when a stock gets added into the S&P 500, and they're showing that love for Palantir Technologies. Look at that. So because they joined the S&P 500, they have now came back up here to those all-time highs of $33 area. Okay, so that's pretty cool seeing PLTR right back up there. But I do want to point out that this is an area of resistance, and I'm going to be keeping a close eye on that resistance right there because that might be an easy take if the market wants to continue lower. So that's probably going to be my top watch for tomorrow. And let's catch up on the chat. So can you look at these pops on SCVL? Was the earnings that good? Let's take a look. CVL. All right, so if I just click on the earnings here and just go on, I'm not a financial advisor by any means, but we can see we have a double surprise here. The earnings was a surprise by 2.47%, and the revenue was a surprise by 0.37%. Okay, when we look at, this is Shoe Carnival, right? So this is a stock that everybody needs. This is apparel and footwear. It is in retail trade, which is a lagging stock right now. You can see it's riding this 50-day moving average. So when we look at Shoe Carnival, riding this 50-day moving average all the time. I mean, every time it hits this 50-day moving average, it continues to climb higher. There's been a few times as of recently it broke that 50-day moving average, but it's looking good. We're going to see if it wants to hold that 50. If not, it might have itself a tasty little pullback, but we'll see. I would say the earnings showed up good, but it looks like their forward guidance was not looking good. So this is what I use for the forward guidance. So sure, they double beat, but they're saying their Q3 that they don't expect to pull in as much as they did in Q2. And if you look at Q3 and you measure it to previous Q3, not only did they miss previous Q3, but their guidance for their Q3 this year is actually lower than their guidance, than their actually negative surprise of Q3 on last year. So no, I would say no, that's not good. Shoe Carnival did pull in a little bit more than they anticipated, but their forecast is saying that they are not in a very good spot right now. So, and also their ETF says the same thing. So, Yosef, PTIR is a 2X Palantir. Is it? Oh, PTIR. This is a 2X. Oh, this looks yucky though. Where's the volume on this? Does it move better intraday? I don't see anything on this 1 minute. This looks like garbage. Yeah, I don't know if I would want to play that. Well, PLTR already moves 3.76%. So like when it comes to shorting, I'm okay with it moving slower just because, when I'm shorting, I buy in, I set my, stop and then pray that it doesn't gap up over that overnight. Also, Dell was a good add to the S&P 500. Yeah, let's take a look at Dell. Is Dell getting some love as well? Let's take a little peeky gander at Dell, guys. All right, so here's Dell. It looks like Dell had a nice pop as well. So Dell, I have some issues with because as you can see here, I marked out a daily trend and I called this base. I called this breakdown and I never took it, guys. I never took it. It's kind of one of those. It's like this was on my watch list. If it doesn't break out, then it's a breakdown trade. It never broke out and it did break down. And man, I'm still gritting my teeth over that one. So that's just one of those things, guys. When you anticipate to actually play it, you don't say, hey, I'm just going to watch to see what happens. I anticipated playing this Dell trade. It would have been a good trade. I doubt I would have been able to hold on this far. I probably, would have used like a 10-day moving average or something after it, cleared all this. I would have taken half out. But that's all speculation, guys. It's below a 200-day moving average right now. Now popping up on this volume gets it just above it. I'm still bearish on both of these stocks. But yeah, good point on Dell's pop. Dell moves 4.4%, so a little bit faster than PLTR. So I'm going to have to put Dell on my list as well for possible morning shorts. My guess is they'll probably start to fall. They'll pop in the morning, come up to where they were trading at, and then just die. They'll sell right into that. But again, those are guesses, guys. Those are guesses. I have no idea, especially when it comes to shorting. Let's see, Predator, Dell, and Erie also joined the S&P 500. ERIE. Oh, wow, yeah, and Erie got a pop as well. So what is Erie in? Erie Insurance Group? Yeah, so insurance companies are going to be doing better as well with the financials as of recent. So that's good to know. So Erie looks like it's actually breaking out of this area. Wow, this thing has been doing really well. This Erie stock. It's a slower mover, 2.2%, but I do like it. So those are my thoughts, guys. Let's go ahead, and if you guys have any tickers that you want me to take an analysis on, it doesn't matter if it follows my base or trend breakout trade. If you want to throw out a ticker and you don't want me to just talk crap about your ticker, or you want me to understand what you're looking at, give me some context. Let me know it's because of this or it's because of that. And if not, that's okay. I'm going to say whatever I want about it anyway. All right, so yeah, Dell and Erie, we looked at that. AAL and Etsy. Let's take a look at AAL, well below a 200-day moving average. This is not looking too good at all. I don't like this stock at all. So AAL, American Aerospace Group. I do not like that. ETSY. ETSY, I don't know why we're looking at these stocks right now. So Etsy is below a 200-day moving average, no pop in the pre-market at almost its all-time lows. I definitely do not like that stock. That's garbage, banana boo-boo. Oh, let's see. BIO. Let's see, BIO. Yeah, so BIO is probably much better. It moves 2.5%, but yeah, I don't really care for it. It's just too slow of a mover. But I mean, it's got this, it's got this base. This is a nice base. It's retesting the base. If it can break out here, that'd be nice. But again, being risk off, it's not much. So it's Michael says Dell did beat and pop on earnings, but all last week data is already sold off. Yeah, I agree. Dell down here just does not look good. First of all, it's because it's below a 200-day moving average. It's below all other moving averages. Then on this pop, it's popped right into resistance. Like, look at the hourly, guys. This pop that you see here isn't on much higher volume at all. But where is it popping into? It's popping into this huge area of volume. You got to take all this volume right here, add all that volume up. It's all of this volume versus this volume, okay? Like, I could just give you more of a visual. So here's the high of this range. What am I doing? Here's the high of this range. What is going on? Nobody look. Nobody look. David doesn't know how to use his charts right now. All right, check it out. We're going to try this one more time. All right, take the highs of these range and the lows of these range right here. And you can see it's kind of funny because when you draw this, it's almost obvious. Like all I did was take the highs of this range, this consolidated range, and the lows of this consolidated range. And if we go over to where it bounced up, look at that wick. It ran right into it and then sold off immediately. There's people waiting there, you know, going, oh, shoot, I can get out. It's all the baggies. Now, if it can hold a new high or low and then start to shape up, but as of right now, I think we're going to wake up and this thing's going to gap down. I really do. I think there's no point in even trying to get a short into this because it's just going to gap down. But yeah, I agree with you. DUOL. DUOL looks like it's really trading sideways here, really forming a base. I never understood why everybody was so happy about it. So Duolingo is pretty cool, but I think that they have a concept that can be kind of swapped for free. Like, I think they're not going to be the only app. Anybody else can make an app that's like theirs. There's going to be plenty of other ones if they're not already there. And if that's their only business model, they're not going to, you know, move into anything else. I just don't see this company growing. Now, I've been wrong many, many times before, but this does have a base. It's above its 200-day moving average. So this might work out here if it can break above this 214. I'm going to set an alert just to keep my eye on it. But I like the base. I like the base. I don't care for a V-shaped bottom, but it's better than, you know, it's better than not. You know, it's better than continuing lower. So we'll see what this wants to do. Let's see what else we got, guys. COMP. Pretty sure I went over COMP. Yeah. So COMP is on my watch list, along with MODD, TRUP. This has an opportunity to really work. So let's look up COMP, and that way we can get a better understanding of what it is as a stock. So it's a technology service and a package software. Okay, so as just knowing that, we know that technology right now is not doing so well, right? It's not doing so well. We know package software, if we look at like Hack or something like that, you know, not doing so well either. But this stock seems to be trying to hold above it all. It moves 5.79%, and the RS rating is above that 90. So what is it? Well, this stock here is engineers in the provisions of an online retail or real estate platform. So that's very interesting. So it's an online real estate platform. Its platform provides an integrated suite of software for customer relationship management, marketing, client services, operations, and other critical functionalities, as well as brokerage services and adjacent services. The company was founded by blah, 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 blah. So that's very interesting. It's marked as technology services and package software, but really it's an online retail store for, you guessed it, properties. Okay. So this is kind of cool. I really like this because this is kind of starting to touch on some more real deal subjects, right? So I'm glad we got to do this together. What we want to see it do is hold this 10-day moving average and then start to take off, because that real estate is looking really, really well. Real estate's looking really, really well. So if COMP can break above this area and start heading higher, that's going to probably be your only plays, is as of right now, is utilities, maybe health, but more utilities, consumer staples, and real estate. Okay, and this is an online real estate, so it's looking good. You know, they're actually a decent company, at least for a quick glance at their fundamentals. Okay, they're a decent company, a very noobish glance at their fundamentals. So I do like COMP. I'm going to keep it on my watch list. We're going to see if it wants to rip, tater chip, baby, because you know we like stocks that head to the north side, especially as a momentum trader. That's exactly what we want to see, trend and base breakouts. Get to ripping, baby. All right. Michael Anthony says Oxy. Oh, yeah, I haven't looked at Oxy in a while. Let's take a little peeky gander. Oh, Buffett, the Buffett sell-off. Yeah, look at this base. Oh, this was like the Buffett, you know, the Buffett buy-in right here. and then it just traded sideways for so long. Look at this thing. It just held for so long. Thanks for bringing this up, Anthony. I really appreciate you. And now it's breaking this area below a 200. This is why, guys, I say nothing good happens below a 200-day moving average. If it can get below a 200, it can go much, much lower. Now trading at $52. It has not been at this $52 since last year. I'm sorry, 2 years ago. Over 2 years ago, guys. That's the last time it's seen these prices. So Oxy is not looking good. Thanks for bringing that up. Michael says, reason it sold off should bend my words. Michael says, I think you can buy DIN at $29.50, I think. Let's take a look at DIN. Let's take a little peeky gander. Dine Brands Global. So the issue that I have with this, well, you're going to hate me saying it, but a breakdown. It's breaking down. You can clearly see that this is on a downtrend. Anybody can see this. We pull it from the top. Let me blow this up so everybody can surely see this. You can pull this from the top, and you can just pull this down like this, and you can see we are clearly on a downtrend. Or you can see we are on a much more progressive downtrend by looking at this area, right? You can see that we're definitely progressing further and faster now below a 200-day moving average while it's declining, you know? So if I were to look at something like this and I would to even slightly consider it, let me just come over here for you. If we get a big sell-off and you're like, Dave, take a look at the stock, and it's all the way down here, this is exactly what I'm going to tell you I need to see before I get in it, okay? And you might say, well, you're going to miss all the meat of the move, Dave. Well, it doesn't matter. This is what sets me up, is new higher lows. So this stock, you can see here after a big sell-off, you get a low, you get a new higher low, you get a new higher low, right? And then look at this, a big push up on volume, a pullback, but I'm not seeing it riding anything. So I don't really care for the stock, but at least it has starting to prove itself with new higher lows, and it's trying to get above these moving averages, okay? Now it pulls right back down and starts riding a 10-day moving average. This is a spot, but it's still below a 200-day moving average, right? I don't really care for this stock. I don't like it. It hasn't gotten tight anywhere. It hasn't done anything. And now it's way down here at 30.75. It's not doing well at all. It wasn't doing well even when the overall market was doing well. So I don't like Dine Brands. Definitely, you know, something if you want to take this or you want to play this, I consider paper trading it. Keep an eye on it to see where it goes. I got to sneeze. Oh yeah, I got the mute button on that one, baby. Woo! All right. Let's see. Oil has Libya issues. You think comp will go lower? Yeah, comp could definitely go lower. Oh yeah, why not? I mean, again, with the overall market, guys, with the overall market the way it is, I don't expect anything to break out. And even if it does, I'm not taking it. I am not taking it. But we are just being speculative over the stocks that are out there right now because we want to see what is holding up the best. And right now, comp is holding up very, very well. CLOV. So last time I looked at CLOV, it was doing really well. It looks like it's starting to break down that 10 and 21-day moving average. The reason why we liked it is because it was holding the 10 and 21-day moving averages for so long. So let's move back here before we get the big breakout. And you can see every time it came back down, it would hold a 10-day. It broke down. It would close closer to that 21-day, right? Break up, holding that the 10-day moving average. Look at this beautiful base breakout right here. That's something else right there, guys. I like that. And then we also already have marked out a couple of... oh, I didn't mute that one. I'm sorry. So we get this base breakout right here. Beautiful base breakout. And this one was already marked. This is a beautiful trend breakout right here. New higher lows, okay, right here. And then it breaks out, boom, right here. Now, I don't know if that was on higher volume or not. I don't think I took this one. I really don't think I did. But that was beautiful. You could have exited half of your shares at the all-time highs and then held on to the rest of your shares, closing out below a 10-day moving average. So you'd have made a little bit more off of that. Of course, another base breakout right here. This looked really good. I like that. Obviously, I'm looking at this in hindsight, but I do like this base breakout, especially because it got nice and tight on that 10-day moving average. You could have even seen this more as a trend breakout if you wanted to, but I promise you guys that's not the cleanest. I just like how tight that gets, you know, and then boom, we did get volume here. It breaks out higher and you could have held on to this until it closed below its 10-day moving average right here. That would have been a nice one. But right now, we have broken the 10 and the 21-day moving average. And XLV is not doing so hot anymore, so it's not the hottest sector. So I think CLOV has the ability to go lower, but of course it might shape up now on the 30-day moving average. We'll see. But it hasn't shown or proven itself on that 30-day moving average yet. All right. AUPH. Let's take a look at AUPH. Oh, yeah, Dan Bob, did I wake you up? Dozing off, and then I sneeze into the mic. I'm sorry, dude. I hope you don't get it, you know? I'm trying to cover my nose. AUPH, so this is the pharmaceuticals. It looks like it already took off. I think we were watching this. Oh, is this on our watch list? I think this was on our watch list last week, but I ended up taking it off. We had this base breakout right here at 703, but I just didn't take it for multiple reasons. One, that was extended from its 10-day, and then two, the overall market, I was below a 21-day moving average, so I wasn't going to play it. But yeah, this looks good. There's no trade in it right now, but you know, if you took this base breakout between $6 and $7, you know, even if you caught the volume and you didn't get it until 705, I mean, you're looking pretty because this thing moves 4.9%. If you use the low of the day, you could have gotten in this anywhere between 720 and lower, and you should be happy with the trade that you're in. So look at the 1 hour. Sure, let's take a little peeky gander at the 1 hour. Yeah, okay, so it came back down, but it popped back up. I like it. It looks good on the 1 hour. Yeah, that's nice. That's like a nice base breakout in the 1 hour. And then the volume really came in here too. So that's nice. Very, very nice, guys. All right. Well, I think that about does it. Of course, I want to say my goodbyes. I appreciate you. So you guys stay in the chat. We'll hit up the Rip Tater's Trip screen, and I'll say my goodbyes. Thank you guys so much for joining me. Please hit that like, hit that subscribe button if you haven't already. We're going to end the poll right now. The question was, are you risk on or are you risk off? That's the real question here. 58% of you say that you are risk off. 25% say you're risk on. 8% say that you are trying or working on new things. And 8% say, tell me what I need to know, sir. Well, I have done that. We had 12 of you vote on the poll. I do appreciate you voting on the poll, and I appreciate each and every one of you being here for me today. We will see you guys very, very soon. And of course, you guys have a good one. We're going to see you guys out, so we'll talk to you soon. All right, guys. Thank you guys so much for being here. I appreciate each and every one of you. I'm sorry it seems a little doom and gloom, especially with the S&P 500 being below a 21-day moving average. But remember, the greatest traders know when to stop trading, to sit back, relax, and be still. And that's just what I'm trying to do right now. Focusing on other things, letting my strategies work out, and waiting for the base and trend breakouts to come back alive. I need a bull market, and we are not in that currently right now. So thank you, Yosef, so much for stopping by. Dan, Bob, Dan, thank you so much. I do appreciate all of you. The background noise that you're creating, brother, you're doing a hell of a job, and I'm glad that I can do this show for the Swing Trader Strategies that you so humbly started for us. Thank you so much, Dan Bob. Predator, thank you so much for being here. Thanks for bringing some of that criteria for me. You are awesome. What's that song's name? What song? Oh, I'm pretty sure it's AI. You're talking about my outro, my intro and outro. Pretty sure that's an AI thing. Michael Anthony, thank you so much for being here, man. I really do appreciate your dedication to this channel and all the comments that you put in there. I really appreciate you articulating on what you're saying. Really seems like you are really getting involved with this market and with this trading show. So thank you so much for that. Erica K, if you're still with us, thank you so much. I appreciate your dedication. You are always here. You're kicking ass, taking names. Let's keep on doing that. Let's see, who else do we have? I don't want to miss anybody. Robert Tainch, of course, always swinging in and saying hello. I appreciate you, Robert. And Jimmy Bright, I hope you got a better stream signal on your phone, dude. That always can suck, especially when you're trying to watch the greatest stock market show alive. Thank you guys so much for being here. And Beef Stewie, last but not least, my boy, Beef Stewie, the beefiest of the stew. Thank you guys. Thank you so much for being here. Jimmy, you made it till the end, dude. I hope you're streamed as well, dude. Have a good one, guys. Have a good night.